Hi, everyone. Welcome to Views from the Bridge. I'm John Fisher, President and CIO of Bridgeport Asset Management. We're here today to speak with Ian Hardacre, Bridgeport's head of publicly traded equities and portfolio manager for our three equity funds. We're going to specifically talk today about Bridgeport's small and mid-cap equity fund, its investment philosophy, and Ian's outlook for the fund for 2023. Let's go in and say hi to Ian. Hi. Thanks for joining us today. Really appreciate it.
Hi, John.
Why don't we get started maybe and just, a good place to start off would be to talk about your background before joining Bridgeport and your experience managing publicly traded equities.
Yeah, thanks, John. So I have over 25 years in the investment management industry as portfolio manager. I started at Ontario Teachers. I worked there for a few years in public equities. I then went to Trimark Investment Management that turned into Invesco Canada. I was there for 20 years managing multi-billion-dollar portfolios and was co-CIO. From there, I went to Empire Life Investment Management, where I worked for 5 years, for them as Chief Investment Officer and Portfolio Manager. And I joined Bridgeport in September of last year, 2022, as Head of Publicly Traded Equities and Portfolio Manager.
That's great. Thanks, Ian. Why don't we jump right in and talk a little bit about the investment philosophy behind the Bridgeport Small and Mid-Cap Equity Fund?
Yeah, so the Small and Mid-Cap Equity Fund targets companies from very small market cap up to approximately $15 billion. It holds usually between 20 and 25 different securities. The investment philosophy really is about buying growth companies at value prices. So how do you do that? How do you buy a growth company at value price? Well, first, you take advantage of pessimism in the market. So have your homework done in a company such that you know where you'd like to buy it. It's just a question of price. And when the market provides that opportunity for you, you take advantage of it. Often that happens when a sector sells off or when individual security sells off. Second way is have your own proprietary view on a company, such that a company may have a new product or new service. That new product or new service is maybe not being recognized by the market. And then you take advantage of that to get outsized returns for the investors. And thirdly, it's really just about time arbitrage. Time arbitrage is taking advantage of having a longer term time frame. The market is so short-term focused, this quarter, next quarter. If you take a 3-year view, you can make outsized return for your investors. And that's really, that investment philosophy holds true for all our different publicly traded equity funds.
And in terms of geographic split, how do you think about that in terms of the fund, US versus Canada, and whether you'd ever consider adding in any stocks outside North America?
Yeah, generally the mix is about 50-50 US Canada. It ranges a little bit off and on. We don't have any non-North American companies, but if there was potential for an ADR, we definitely do that. But we have the whole universe of North America to invest in. So there's a lot of opportunities in small mid-cap where the market tends to be less efficient. So if you do your homework, you can find stocks that can have really great returns over time.
And the fund has had a significant number of buyouts last year during 2022, a significant number of takeovers. Maybe you can talk a little bit about that and why that's important.
Yeah, absolutely. So the small mid-cap fund had 7 takeovers or pending takeovers this year, which is unheard of in investment management. In a good year, you'd have 1 or 2. And, having a takeover in the fund's important because you get a big premium the day the announcement's made. But it just shows that you've been doing the right thing in the fund. You've been buying good quality companies, undervalued, that other people recognize the value in. So that could be a financial player like private equity, or it could be an industry player that comes in and wants that asset or that company to be part of their own. So we've had a number of them, as I mentioned, 7 either done or pending. Some of them, like pending, is Summit REIT. There's a lot of other ones like Intertape Polymer as an example, LifeWorks as an example, and right now Ritchie Brothers trying to buy IAA, which was in the fund. So there's been great. It's been great. The team did fabulous in terms of picking undervalued stocks.
So I know all of those takeovers really helped the fund's performance last year, despite it being one of the most challenging years in the stock market since 2008. Maybe you can talk a little bit about how the small and mid-cap equity fund has actually performed over time.
Yeah, well, firstly, John, 2022 was a very strong year for the small mid-cap fund in terms of relative performance versus the Russell 2000 and the BMO Small Cap Index. But more importantly, it's about the longer term numbers. Since the start of the fund in mid-2015, the fund's done about 8.7% annualized versus the Russell 2000 at approximately 6%, and the BMO Small Cap Index, which did about 3.5%. So the numbers have been very strong since inception in mid-2015.
That's great. That's great. I think it'd be helpful just to give the audience, maybe a couple of examples of holdings in the fund so they can get a sense of the sorts of investments that the fund makes.
Yeah, absolutely. So we've added a number of new names, but recently we added Watsco Inc. Watsco has a market cap of about $10 billion, headquartered in Florida. Started in the southeast in the Florida area, and their businesses, they are an HVAC distributor, so heating, ventilation, and air conditioning. They sell mainly to contractors, but they have a number of competitive advantages. Firstly, scale. They're much larger than their competitors, so they have the ability to invest in technology, which is helpful for the contractor customer. Two, they have a very strong relationship with Carrier, which, as most people know, is a large provider of heating and ventilation and air conditioning equipment. Thirdly, they sell into a very fragmented market, which is helpful because it gives them pricing power when they sell to tens of thousands of contractors. And lastly, that market has a lot of regulatory and efficiency changes that happen on a continuous basis, which means the replacement cycle is quicker, and it gives them pricing power as well. So very good company. Over a 30-year period, that company's compounded the stock price at over 20% a year if you include the dividends. So we had the opportunity to invest in it recently in the market sell-off in the fall, and the outlook for the company continues to be very, very good.
Any other examples that you might want to give?
A second company that we've added is Brookfield Business Partners, wholly owned by Brookfield Corporation. It's a private equity arm. In Q4 of 2022, the company's stock price sold off significantly to where I believe that it was trading at about half its net asset value of the companies in the portfolio. There's really no reason for it to sell off other than the pessimism in the market that I've referred to earlier. We took that opportunity to build a relatively large position in that company in the small mid-cap fund, which I think will pay off definitely over time.
That's great. That's great. And, can you give us a sense of the size, I guess, based on, market capitalization of the companies in the fund? Is there an approximate sort of cutoff or range as to what size publicly traded companies go into the fund?
Yeah, well, we have a lot of flexibility in that fund, which is one of the benefits of the fund. I mean, the smallest market cap company is probably about 150 or 200 million. And the largest one goes up to approximately 15 billion US. Now, there's a difference in the Canadian market versus the US market. Small mid cap in the US market is significantly higher than small cap mid cap in the Canadian market. So in the Canadian market, the average small mid cap would be maybe $1.5 billion. Well, in the US market, that can get up, as I mentioned earlier, to about 15 billion company in size. As I mentioned earlier, we hold about 20 to 25 stocks, so it's fairly concentrated. So really is a best idea fund where we do a lot of work on the companies, but we do that work because we make them a significant position within the fund.
Well, thanks, Ian, for speaking with me today. I really appreciate it. I know we're both excited to see how 2023 is going to unfold. So thanks again.
Oh, you're welcome.